Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant with me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, good morning, guys.
Morning.
Do you call up any of your friends in the US who like to watch Indian movies? I guess the headlines are coming in on the movie business this morning.
Absolutely. I mean, you don't know where he's going to go next, right, Mr. Trump? But I don't know what kind of an impact it'll have. But difficult what he's going to do next.
It's all entertainment.
But it's a festive season, guys.
So-
We're like moving ahead with Navratri. Dussehra is around the corner. So, it's all good.
And today is the expiry, and today marks the end of the halfway mark of the fiscal year. So, hoping for a better second half of the year.
Absolutely.
All right, well, let's just take it from the top then, right, in terms of what you need to know as we begin this session. So equities last night in the US higher, but they kind of sort of sold off into close a little bit, paired gains into close. S&P was up about 0.25%, Nasdaq was up about 0.5%. I mean, the big talking point, and it's just a talking point, is, of course, concerns over a US government shutdown, which looks likelier than not, starting the 1st of October. So you had J.D. Vance, the U.S. Vice President, who said that I think we're heading into a shutdown because Democrats won't do the right thing. And, of course, enough commentary from the Democrats saying, well, the Republicans aren't climbing down, piping down. So far, no agreement. Last minute, it's known to happen many times that it gets sort of eventually resolved. The Bureau of Statistics in the U.S. essentially said that it will delay the jobs report, the jobs data, and suspend all operations in the event of a government shutdown. So basically, if you think about how this impacts markets straight up, of course, I mean, it'll have an impact if the government shuts down, people don't get paid, etc. And there have been instances of extended shutdowns as well. The impact is there. But immediately, some of the important data which the market kind of hangs on to, which, for example, is the jobs data, which is up on Friday, will get pushed out, will get delayed if the government shuts down. That was confirmed. Now, US 10-year yield was down about 3 basis points to about 4.14. Dollar index was down about 0.25%. 2 days now, dollar index is, basically it got past 98. We're just under 98 now. So about a 0.4% day before yesterday, 0.25 last night as well. Gold prices continue to climb higher, so above $3,800. Silver, of course, as well, doing very well. And Manisha will talk about both those in a bit from now. And remember, lots of silver ETFs, and we highlighted that towards the last hour as well, all kind of mirroring what's happening with underlying physical gold prices. Oil prices, about a 3.5% drop, back at about 67.7. It was a large drop. And, of course, signals that OPEC Plus will likely raise output once again in November. So after October, perhaps in November, they will see an output hike again. So we'll just tie in the levels here. Nifty, of course, could not really hold on to the gains in any respectable way or fashion. The market, of course, started higher, sold off, another attempt, sold off. And towards the end, there was an attempt but did not last. So we ended pretty much where we started at about 24,600 kind of levels. So the support zone, once again, doesn't change. It's 24,400, 24,330. That broadly, this was, by the way, the prior support zone before the market saw that 1,000-point up move. So we're basically back where we started in that sense. The resistance comes in at 24,807 and 24,923. Very near term. 200 points basically on either sides is what we are working with for now. For the Nifty Bank, we need to hold above yesterday's low, which then becomes a bit of a support. 54,226 is that a level. And resistance is the 40 hourly and the 40-day exponential moving averages. So 54,860 is the hourly. And 55,078 is the daily exponential moving average for the Nifty Bank. So not very much has changed as we sort of, pick up from one day to the next. US, India, trade stuff, etc. Absolutely quiet, silence, nothing very much at all. Not very much to go along with in terms of new stuff, new triggers, either up or down. GIFT Nifty will give you a quick sense of how we likely to start. We'll pick it up from there. So it's quiet there as well, about 8-10 points higher. How's the F&O stuff looking? Nigel is standing by now with exactly that. Nigel, over to you.
Well, important trading session today because you have the September week monthly expiry that will play out. You have the end of the halfway mark of the fiscal. That's the end of the first half of the year. And also you'll have a run-up to the RBI policy as well. So those are the top cues that you'll be tracking. For the Nifty, we're in a 7-session losing streak. Gives you a little bit of that eerie feeling. While the Nifty Bank, the good news is, yesterday at least it broke its losing streak. And the rollovers come up for you on the screen, pretty much in line with averages that we have seen getting into the expiry day. So at around 67%, at around 71%. One positive yesterday was that the broader markets, at least, there was some bit of green and some bit of an outperformance after a few trading sessions. So that's good. I'll keep an eye out on the broader markets because that's what impacts your portfolio. The other good news is that yesterday, the gross volumes actually were very, very high from the DIS perspective. There was some rejig that took place. So that's why that could be the cause out there. But net, you had the institutions that were buyers to the tune of close to around 1,000 crores. So that's positive. The FI selling needs to cool off. That's important because the last week it did spike up. What do the FIs do in the F&O market though? On index futures, they added some short positioning. Short positioning holds at around 84%. On stock futures, there was an element of rolls that we saw. There was some bit of an arbitrage as well. But net, you had some shorts that covered out and there was some long addition as well. And what's going to give some kind of, glimmer of hope to the bulls is that yesterday the FIs actually wrote more puts than calls in trade. And that's after a few trading sessions that we saw that. Remember, the PCR is still at the lower end of the range. Yesterday, it was at around 0.63, 0.65. That's popped up to around 0.7, but still at the lower end of the range. And we're going to get 2 strikes up for you, and both these 2 strikes will be expiring today. So the 24,700 call, the bears believe they have got this covered. At higher levels, they believe that, we are not going to, run away beyond that mark. So that's why that call writing is extremely aggressive. Well, there was some put writing as well, which brings us to the levels. The 24,500 mark is the important mark. You don't want that to get breached on the downside. And with the last many trading sessions, we have been making lower highs. So in that case, this is the reference point for today, 24,791. The Nifty Bank comes up for you on the screen. That's pat in the middle of the 20 as well as the 200 DMA. So you'll want it actually to get closer to around the 20 DMA, which is around 200-300 points away from current levels. If you can get past that, at least the technicals start moving in favor of the largest constituent, that's the Nifty Bank. 2 stocks that we're looking at, Sammaan Capital. We had highlighted this on Friday. Yesterday, in fact, we did see, the stock moved up on very, very large volumes. There was a large trade that took place as well. So Sammaan Capital is one stock that we'll be tracking because it's come into the F&O ban and volumes were absolutely massive. I think they could be raising some funds. The other one is RBL Bank, continues to hold steady and continues to hold on to its form despite of the Nifty Bank getting a little bit jittery. So both these 2 stocks continue to be on my radar.
Okay, well, let's look at cues across Asia as well, and they're fairly mixed, but there are big headlines coming in from China, by the way. First of all, the PMI numbers in China, the official PMI on the manufacturing side, those numbers are looking good. Strongest since March, though it is still in contraction territory. The private sector PMI survey is actually indicating faster than expected expansion. So, data out of China is good, and there's a massive listing in China this morning. A huge gold miner has listed. Listing was in the market to raise more than $3.2 billion. And the shares are surging 60% this morning in Hong Kong. So big moves out of the Chinese markets. But otherwise, index level, things are all right. Let's get to the implied open then. Very, very flat, as you just saw over there. About 9 points up is what the indication is, at least at this point in time. So maybe we get more of the range-bound trade. Let's see. Now, the equity call of the morning, and it's coming in from Rajiv Batra of JP Morgan, who says that despite rising concerns about a potential near-term slowdown in India's growth driven by 50% US tariffs on Indian imports and increased US H-1B visa fees, domestic catalysts such as GST 2.0, lower interest rates, and recent tax cuts could help trigger a recovery in consumption and corporate earnings. He continues to recommend domestic over exporters with an overweight stance on financials, staples, discretionary, materials, utilities, power, defense, and real estate. He says their underweight sectors remain IT and pharma. So fully enthusiastic about the local stories here in India.